Hi, this is Chris from A in Finance. This is a step-by-step video for how to do your own financial review, and it goes along with our blog post by the same name. The blog post has some additional details, so please check it out too. We're going to do three main things here. First, we're going to fill out a personal finance template to get an overall snapshot of your finances. Then we'll do a quick assessment of how you're tracking with your retirement savings. Finally, we'll do the same thing for your college savings. Note, we're not going to review your investment portfolio in this video. It's an important part of the review, but it's something that deserves its own in-depth discussion. So let's get started. The first item we'll do is complete the personal finance template. You can download it from my blog post. Let's open it up now. We're just going to focus on the first two tabs, balance sheet and retirement. The monthly budget is in the spreadsheet just as an example. Let's start with the balance sheet tab. Your balance sheet is just a snapshot of all your finances on one page. We're going to add up all of your assets, those are your bank accounts, investments, retirement accounts, house, etc. And subtract out your liabilities, those are all of your debt, to get your net worth. Most people really don't know exactly what their financial situation is. They just have a feeling. Doing this will put you ahead in the game. Now, most of this is just collecting your bank and brokerage statements from your filing cabinet, or even easier, logging into them online and getting the info there. I timed myself and it took me less than half an hour to do this, so it's pretty quick. To spare you having to watch me do it, we'll pretend we are logging on into our accounts. We'll quickly go through it, entering some numbers, and I'll point out some tips along the way. First, let's enter your account balances for your checking and savings accounts and any CDs you have. You might keep a separate savings account for your rainy day fund. That's something you don't touch until you really need it, like losing your job, etc. Hopefully you never do. Next, if you have a brokerage account with stock, bonds, and mutual fund investments, we'll enter those. Note, it helps to keep taxable investment accounts separate from your retirement investment accounts. Now in the next section, let's put your retirement accounts like your 401ks, IRAs, Roths, and annuities. First, you'll want to group your and your spouse's accounts separately. You may want to keep track of other retirement details, so we have a separate tab for that too. This info comes in handy later when you are considering things like Roth conversions. Let's take a quick look at the retirement tab now. The first thing you want to do is copy the info on the balance sheet tab in the retirement section and paste it over into the retirement tab. If you need extra rows, insert those before you copy and paste. Then just fill in some additional info like your cost basis and monthly incomes. Your 401ks and deductible IRAs have zero cost basis because they are pre-tax dollars. Roths don't really matter because they are tax-free. So you probably are only looking at any non-deductible IRAs and annuities. You'll probably have monthly income estimates for your pensions and annuities. Note, when you use retirement calculators, we either choose the account value or the monthly value for each account. Don't use both, otherwise you are double counting. You'll also want to find your monthly Social Security benefits. If you have a statement, they'll have the expected benefit in there. If not, you can use the quick calculator as I posted in my blog post. It'll just be an estimate because it won't have your actual earnings history. But it's pretty easy. You just enter your birth date and your current income. Your college savings is usually in a 529 plan. If you don't have one, you should open one up and use that because they allow your gains to grow tax-free for the money you will spend on college and grad school. Check your state if you have state tax deduction. Otherwise, you can choose any state 529 plan. If so, then just select one that has low expenses. The last category is where the rest of your stuff goes, like your house, real estate investments, etc. It's important to note we're not including your cars, jewelry, and other things like that. Those are really consumables rather than real assets. You can't really turn those into money. Now let's put in all of your debts and obligations. I like to put in the interest rates and the loan payoff dates too. That way it's right in front of your face and it's obvious what you should pay off first. After we've entered all of our assets and liabilities, we can see our net worth. I also like to exclude your house and mortgage because the equity in your home makes you feel artificially rich. You're not really going to cash out and sell your house. Where are you going to live? So you shouldn't consider the equity as cash. Anyways, bottom line, you want your assets and your net worth to grow over time. That's it for step 1. Now that we have your personal balance sheet completed, let's move on to the next major step and do a quick assessment of how you are tracking toward your retirement using some free online calculators. There are plenty of good ones. We have a few links in our blog post, but we'll just Google retirement calculators to see. We'll use the bank rate calculator in this video because I find it to be super easy to run a lot of scenarios. And as mentioned in the blog post, we want to do low, mid, and high cases, so we have a range for your retirement situation. So let's get started with your base case. Let's scroll down and enter some of your info. Let's say you are 40 years old, you want to retire at 65, your household income is $180,000, and you save 15% of your income. For your current savings, let's get it from your personal finance template. Let's add your retirement and your investment accounts together. Okay, it's a total of $287,000. Let's enter that. Let's keep the expected income increase at 2%. The key variables that we'll adjust for our scenarios will be income required at retirement and years of retirement income. So for our base case, we'll use 85% of our current income in 25 years. Next, you'll want to click the plus symbol in the investment returns, inflation, and Social Security section. I'm going to use the default returns and inflation assumptions, but you can adjust them based on your investment profile and corresponding return. Check buried if you are, and also check include Social Security. Now you can hit the minus symbol to hide this. We won't be making any more adjustments to this section. The calculator automatically shows you a summary below, but let's click the View Report button to see the detailed report. The report says that our retirement savings runs out at age 89, so we're a little behind. Scroll down a little to the To Help Your Goal section for some adjustments you can make. We can increase our savings to 15.89%, reduce our retirement income needs to 83%, and delay retirement until age 66. Now let's click the Print button. Print out the report and write base case on it. To go back to the inputs page, we want to click on the Hide Report button. Now let's run a pessimistic scenario. Let's only change the income required in retirement to 90%. That means we're going to spend more. And the years of retirement income to 30. That means we're going to live longer. And run the report. We're now a little further behind in this scenario. Click View Report, print it out, and write Pessimistic Scenario. Let's click the Hide Report button and do this again for our optimistic scenario. Let's change income required to 80% and 20 years of retirement, so we are spending less and living fewer years. This scenario shows that we are on track with the surplus that we can give to our grandkids or kids as an inheritance. Again, click View Report, print it out, and write Optimistic Scenario. The base, pessimistic, and optimistic cases should now give you a range of your potential retirement needs with some high-level adjustments that you can make. One of those levers that you actually have a lot of control over is your savings rate. So let's go back to the inputs and check it out. We'll revert to our base case again. Remember, 85% income in 25 years. And start playing with the savings rates a little to see how a little increase can help meet your retirement goals. Let's say you increase your savings from 15 to 18%. Wow, now you have a $600,000 surplus that you can leave for your kids and future grandkids as an inheritance. So that's it for the retirement, and that was pretty easy. Now let's move on to your college savings assessment. For the college savings assessment, we'll again use a bank rate calculator. I like it because the assumptions are straightforward and easy to adjust. I also like that you can add more than one child to your estimate. Let's start adding your info. We'll leave the education rate as the default. Most other calculators have it in the same range, 4 to 5%. Let's grab your current savings from your personal finance template. $35,000. Let's enter that. I'm going to leave the rate of return as the default rate of 6%, but you may want to adjust it based on what stage you are in. For instance, in a lot of 529 plans, they have age-based investment options that shift you from aggressive to conservative as your child gets closer to college age. So, if your child is older, you might want to use a lower rate of return. For college costs, we can scroll down and see the average cost for public and private schools, and we can use one of these. Or, if you have a specific college in mind, you can get the estimated costs for that college. As mentioned in my blog post, I like the CNN College Cost Finder because it also has an option to see estimated costs with financial aid included. So let's assume you expect college to cost $32,000 per year. Let's add a second child too by clicking the plus button next to college expenses for second child, and we'll assume the same college costs. Click the View Report button to see our results. It will tell us how much it costs for college in total and how much we'll need to save per month to get there. Based on our inputs, it looks like we're quite a bit behind on our college savings, and we'll need to make some significant adjustments to get there. So that's it. It looks like we're doing pretty well on our retirement plans, but are way behind on college savings. With our financial review, you can start making some educated actions towards your budget and savings plans. Going forward, this will be much easier to do since you'll only be updating your account totals. And don't forget to add a recurring reminder in your Outlook or Google Calendar to do your financial review every year. If you thought this video was helpful, please give it a thumbs up and like us on Facebook. Thanks. Bye-bye.